Good evening, friends. The July has ended, and what an eventful month it was. So today I'm going to discuss about what happened in the month of July. August did not start on a very positive note, am I right? And how do we see the market going forward? There are certain trends that are looking very clear cut, which we have been discussing about in our webinars, and the data just reinforces that what we have been talking about. So before I begin my webinar, a small disclaimer that this webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying or selling any stock. Investment in securities market are subject to market risk, and past performance is no indicator of future returns. Now, you look at what happened to the market. The biggest fear, we had budget, am I right? And the biggest fear was that there will be a hike in the capital gain. And despite there was a hike in the capital gain, both on small short term as well as long term, and plus STT on the future option moving up, market did not go down. It continued its upward journey, and I'll show you the journey of 20 to 25,000, how quick that was in my subsequent slides. One of the reason has been the liquidity has been very, very strong in the Indian equity market. Like the one data that came out which says that mutual fund industry was sitting on a sideline of near about 1.5 lakh crore, which they have not invested. And yet, when I present monthly inflow to the market, has been still quite substantial. So despite they taking some amount of cash call, the overall liquidity was quite robust. Nifty and Sensex closed by 3% up, and mid and small cap by 4.4 to 4.5%. Advanced decline history was quite favorable, clearly suggesting that rally was not restricted to few stocks, but it was across the market. But there was a one trend that came out very clearly, that sector rotation started happening in the market. The leaders of yesterday are likely to be the laggards of tomorrow. And the laggards of today are likely to be the leaders of tomorrow. Why am I saying so? Because if you look at the IT sector, everything was going wrong with them, am I right? Because of fear of artificial intelligence, fear of US economy not doing well, and that they turn out to be the best performing in the month of July. FMCG also bounced back very strongly, while realty and PSU banks underperformed. Foreign investors injected 32,000 crore. They did in the month of June, they did in the month of July, positive inflow. Let's switch gear and come to the economy side. Not only the budget got presented, even the economy survey was present. And have taken two quotes from the economy survey, which I'll end with that when I end my presentation today. The economy survey conveyed a very strong optimism about India's growth prospects. Budget, on the other hand, maintained the glide path on the fiscal deficit with the 4.9% projected for this financial year. What comes as a big surprise to everyone, that one number that everyone would watch out very carefully in the budget is a disinvestment target. And it was there in Feb 2024 budget documents. It was missing in this year's budget, purely because government did realize that the moment you identify the company that are up for sale, the price normally start collapsing because there is a more liquidity coming in. There was a hope, and rightly so, that government will give some relief to the taxpayer. Sorry. And it did, but marginally. especially on the new tax regime for the personal income tax. And I think government wants more and more people to go for a new regime of the personal income tax. We discuss in our budget analysis also political consideration ensure that high allocation made for the Bihar and the Andhra Pradesh. Auto sales are little subdued and there is an inventory being piled up at the dealers level. Some of the companies started offering discounts to clear the unsold inventory. There is a one trend which is emerging, and maybe if I get some time in future, I'll try to discuss about it. The new models that has been coming in, I think they are getting more accepted by the market. The old models are finding little difficult to take off. 1 year back, same time, no car manufacturer dealers were offering discount, and today you go to dealer, they are offering discounts. They are offering certain packages to boost the sales. The numbers came out yesterday for the month of July were not very exciting. The number that came in for the month of June also not very exciting. We also core sector growth coming down significantly to 20-month low to only 4% as compared to 6.4% of May 2024. And even if I look at YTD, that is from April, May, June, the number is down as compared to the same period last year. So on one hand, the demand for the diesel and petrol has gone up, but the core sector numbers doesn't look very exciting. So is the case with auto sales. On the other hand, inflation is remaining very stubborn for India. While other parts of the world, inflation has started coming down. In India, it moved to 5.08% for the month of June as compared to 4.8% in the month of May. And what is, again, and of course that's been happening, it's not happened just for the month of June. The rural inflation seems to be more stickier than compared to the urban inflation. Not only this problem is with the higher inflation is on the retail side, even WPI also moving up 3.36% as compared to 2.26%. So when you look at it, we saw yesterday Bank of England cutting rate of interest. In the previous month, ECB cut the rate of interest. In US, the inflation is coming down. But India seems to be in a very different mode altogether. The worry is that the inflation may remain little higher for the very simple reason the food inflation is a little stubborn. What happened in Himachal yesterday will further flare up the food inflation price, especially on the northern belt of the country. टमाटोस प्राइस, टमाटर का जो प्राइस था जो 100 रुपये का किलो था, सोचा था थोड़ा कम हो जाएगा. Doesn't look like it's going to happen. While on one hand we saw auto sales coming down, on other hand we saw FMCG and consumer goods are struggling to report growth. Core sector growth coming down 20-month low, but GST collection has been quite robust. And the data which got released yesterday, it touched 1.82 lakh crore, growth of 10% Y on Y. And when I look at the YTD, that is from April, May, June and July, 10.2%, taking it to 7.38 lakh crore gross. And if I have to net, that is after refund, the growth has been much better, 11% to 6.55 lakh crore. I must tell you that the numbers from last couple of months has been little tepid. And the number coming in for June, quite reassuring that there is nothing much wrong with the Indian economy. We need to see and wait how sustainable these numbers remain. This was also the month where a lot of action taken by the SEBI and the exchanges. SEBI came out with the report first talking about intraday trade by the individual investors. And the study found that 7 out of 10 retail investors lost money in FY 2023 by doing intraday. On the top of it, while the budget increased STT on the FNO, SEBI came out with the consultation paper asking investors to put their feedback by 28th August. Rest assured. And today or yesterday in the FICCI event, one of the SEBI director made a statement that options market is like behaving like a casino on the day of the expiry. Expect more restriction coming in on the FNO front. Most probably that should happen by the next September, because 20th August tak ka to consultation demand a suggestion on this, and then SEBI will take some more time. If not September end, maybe the first week of October. But that's not it. National Stock Exchange came out with the news that as 1,000 company will no longer be eligible for collateral. Of course, that will happen in a phased manner starting from 1st August till 1st November. In other words, those who are using that as a collateral to play in the FNO market, their ability to play will come down. So see, look at these measures. So while individually it doesn't look very exciting or you don't get a picture. But when you look one after another, clearly regulator, exchanges, Government of India, all are talking about how to reduce that valuation which becomes so frothy. How do we basically control that? How do we some way reduce the liquidity in the market? And that's the message coming out very clearly. Again, shifting gear from Indian economy to the global economy. As we discuss about the Indian economy still continues to have high inflation, the US economy seems to have done better. Inflation came down to 3% from previous month of 3.3. Clearly suggesting that Fed did not did the great cut, am I right? But they're clearly suggesting that on 18th September, we should expect the first rate cut coming in from the Fed, which everyone was expecting in last 12 months. And look at this mood, If you remember, the US economic data came out very strongly for the second quarter. Annual growth of 2.8%. No one expected that. Why? Because the first quarter annual growth was only 1.4%. Now this came to 2.8%. And now people are talking about last 2 days that economy is slowing down. And due to that, even US market is coming down under pressure. I don't know what is the US market today. But, yesterday it came under pressure. I think Dow is down. That's what I'm getting a sense. Yes, down. Dow, Nasdaq is down by 2.26%, but I don't know if it's updated or not. And 1.5%, S&P and Dow Jones 1.25. So news, how this sentiment changes. Last month में ये जब data आया GDP का, people talking about soft landing, and that's the thing. And suddenly the mood is changed. It takes few days of market movement. Market sentiment changes like a fickle. It changes in no time. So be careful with that. What happened in the US can happen in India. Just to give you a heads up. ECB did rate cut in the month of June. Bank of England did a rate cut from 5.25 to 5%. Global economy, two things happen. In the US, there was an assassination attempt on Donald Trump, and because of that, the popularity of Donald Trump went up substantially. We then realized that he has absolutely no chance to win against Trump, considered and opted out of the presidential election. Kamala Harris has come in, and now there seems to be a little tough fight. Previously, it was believed that it would be one-sided game. It looks like a tough fight. And now, because of that, equations are changing very, very fast in the US. Another thing which happened is that China, which is a global economy and very not the global, a very large economy, demand for gold is coming down. Now, China is one of the biggest consumer of gold in the world. Remember that. Not only the retail demand is slowing down because China is still struggling to come out of its slowdown the economy, but the Chinese central bank, which used to buy substantial amount of gold, have stopped buying. My sense is that, this is my personal opinion, if I go wrong, please hold me accountable, not Markets Mojo, is that gold price may see some amount of softness going forward. This is despite Government of India reducing import duty on gold. So logically demand should go up. But despite India's demand going up, we don't see prices of gold back purely because of demand supply issue. And now someone would argue, and rightly so, if the rate of interest is going to come down, why should gold should not move up? Fair argument. But we have also seen that when Fed rate hiked the rate of interest, gold price also moved up. So if that equation did not hold true, why this equation should hold true? That's a debate, and we'll have some another day to see whether this statement I'm making is coming true or not. Let's very quickly through about the market data. Advanced decline ratio remain in positive zone, but come down from 1.3 to 1.1. So that's a thing that we have seen that. Am I right? Just 1 point. Okay. 1.3 to 1.1 it came down to. But positively it remained in the positive zone. Market cap of India touch all-time high 460 lakh crore. Whether valuations, whether market cap to GDP, I think market seems to be throwing in the dustbin. Law of gravity seems to be applying to the market. And due to that, and one more thing, there are two things which are happening. If you look at this advanced decline ratio which is coming down, and look at the volume has come down 1.52 lakh to 1.39 lakh crore, average cash delivered on NSE. Our sense is that further it will come down in the month of August because of steps taken by the NSE in terms of collateral. Number one. Number two, FNO पे STT बढ़ने से, I think and some softness in the market sentiment can bring that number down somewhere closer to the May level. But of course, we'll wait and watch. Nifty CPSE did extremely well. IT is up by 11% in 1 month index. Pharma is up by 10.2%. You can see this, and FMCG up by 9%. Auto managed to close in the green with 5.4%, but mid and small cap did well. Nifty and Sensex both are up by about 3%. Okay, but look at this. Bank Nifty continues to be down. Nifty Finance continues to be down. And these two, PSU Bank and the Realty, which has been the star performer in the first half, have started seeing some amount of a underperformance happening. That our sense is that it will continue to underperform going forward. ONGC did one of the best performing stock sector. HDFC Life and SBI Life did extremely well. But look at Infosys. Despite the GST, demand up by 17.4%. Of course, that happened on the 1st August. But I'm saying that it did extremely well despite so-called softness in the the IT spending and so on and so forth. HCL Technology up by 12%. Okay, and look at Tata Motors. Despite slowdown in the auto, it did well. ITC, not because of any tax hike in the cigarettes, up by 16%. BPCL came out with the good, did extremely well, despite numbers have not been so great. So it has been this one. We will see some revival happening in life insurance business. We are seeing some revival happening in the IT sector, and whether that gets sustained or not. Axis Bank down by 7.6%, HDFC Bank down by 5.3%, Tata Steel down by 5%, Reliance down by 3.5%, and so on and so forth. it has been an IndusInd Bank. So if you look at some of the leading private sector banks have seen some decline happening purely because of some growth concern. Our sense is that from this level, downside is little limited, upside is very good. FI has put in 32,000 crore after putting in 26,000 crore in June. And if you look at the DI, the activity remained robust. They again pumped in 23,000 crore. And when I look at both DI and FII, almost 55,000 crore has been put by it's just in a single month. So liquidity has been quite strong in the market. Nasdaq, again, the change in the sentiment, and it takes no time to change in the sentiment. If you know that artificial intelligence was the name of the game, and Nasdaq was surging ahead. In the month of July, Nasdaq was down by 1.6%. Now people are questioning, does the AI rally is justified? Why is that? Why are they saying so? Purely because people are saying, if we are putting so much money in the AI, what is the return we are going to get? And that's really creating some amount of pressure on the AI related story. And some research reports coming out from some of the broking firm, especially on Goldman Sachs, is questioning the complete rally, and market is little subdued. Anyway, the S&P 500 was up by only 1.13% in US, but in India, the BSE 500 was up by 4.32%. So some amount of divergence happening between the US market and the Indian market. And remember, while the Nasdaq was down by 1.63%, the Indian IT index was up by 10.8%. So again, there's a divergence between the Indian IT and the IT related companies in the US. Monsoon recovered from 1st July -7 to +3 on 1st August. What causing a concern right now is the spread of the monsoon. And if the monsoon doesn't get spread very well, I think market will get little jittery going forward. Of course, nothing has been too much of a concern as we speak, but we need to watch this space very, very closely, because what has happened, at some places monsoon has been so good, it resulted in excess rainfall. It doesn't help crop, am I right? It destroys the crop. And some places the rain is not there. So I think the market will have to look at these numbers very carefully, at least till mid of August. The journey of Nifty, we all know that it touched 25,000, and look at this journey. I think every 5,000 journey is becoming shorter and shorter. Like the first 1,000 to 5,000 took almost 3,000 days. Then the next 5,000, 10,000 took only less than 2,500 days. 10 to 15,000, 876 days. 15 to 20, 644. And it took less than 1 year to move from 20 to 25,000. And that's the beauty about the speed at which it is happening. Now it does cause a little concerns also. I'll be very honest with you. What we have observed, that when suddenly the market goes up, then it stagnates at certain point of time. So maybe the journey of 25 to 30,000 may not be as smooth as what has been happening. Am I right? It has been a very linear curve kind of a stuff, which may not be the case for 25 to 30,000. Mutual fund, 21% of the scheme have outperformed in small cap in last 1 year. Fund managers are struggling to outperform the benchmark, which is a reality. I know a lot of you people do put money in the mutual fund schemes, but have you ever bothered to look at it, how that scheme is able to perform versus the benchmark? 79% of the schemes have underperformed their respective benchmark. In mid cap, 59%, in flexi cap, 54%, in multi cap and the large cap, the numbers look little better, but still 37% have underperformed the benchmark. Unfortunately, more money goes into a mid and small cap mutual fund scheme. Since you do SIP, you don't realize whether the schemes are underperforming or outperforming. But the reality is that 1 year period, the more and more schemes are underperforming. We are still in the result season. Almost two-thirds of the company have declared the numbers in terms of market cap. The growth in the profit is merely 4%. Our sense is that by the time result season comes to an end, the June 2023 numbers and June 2024 numbers in terms of net profit would be very similar. Maybe 1 or 2% growth, that's what we expect. And if I have to look at the company that were declared with the June numbers, and those who have not declared numbers, we have taken March numbers, and based on the trailing 12 months, the India Inc. P is coming out to 28.6, very closer to 20, which is still a very richly valued valuation that we are having. So what should we expect going forward? Should we expect the rate cut from RBI, which is going to announce its monetary policy next week? The answer is no. Why? Purely because of food inflation. If at all there will be rate cut from RBI, would be post-Fed, that is post-September. Our sense is that food prices will remain at the elevated level. So don't expect any relief on the food price despite. So normally during monsoon time, the food prices come down. But this time due to erratic monsoon, why? Because of damage happening to the food crop and vegetable especially, the prices will remain little elevated level. Fortunately, IMD has predicted that rainfall would be above normal in August and September, purely because of La Nina kicking in by end of August. But what is very critical, that market will watch it, the spread of the monsoon. We don't want excess rainfall in one place and scanty rainfall in the other place. We want normal rainfall at all places, and that's what market. Geopolitical tension has gone up, especially Israel has been able to assassinate 2 leaders of Hamas, and due to that the geopolitical tension has gone up globally. Iran may retaliate, and if that happens, complete Middle East region could see conflict that could result into high crude oil prices, more countries joining, and so on and so forth. There are reasons this one. Result season will come to an end in next 15 days. Unfortunately, there are more downgrades as compared to upgrades post numbers coming in. And I think market will closely watch, does it merit a revision of earnings for India Inc. for FY 2025. Probability is very, very high. Okay, and of course we do expect regulatory measures coming in from the SAB on FNO side. The message is loud and clear that we want to curb FNO activity by the retail investors, and if that happens, I think market will get a note. And remember, every month that collateral that I was talking about from NSE will keep decline. I think it's 40%. It will further go to 60%. So and so by November it will be 0. Now I want to I have taken 2 quotes from the economy survey which was presented last month. And please read this quote. It says the financialization of economies has not ended well, giving 2 examples of advanced economy and the emerging economy. One is that the global financial crisis of 2000 is an obvious example. Developing countries face debilitating crises when the financial market innovations and growth run ahead of economic growth. The Asian financial crisis of 1997 set back the high-flying economies to the region for a long time. Therefore, India needs to have an orderly and gradual revolution of financial market. That's quote number 1. And quote number 2, the significant increase in retail investors in the stock market calls for careful consideration. This is crucial because the possibility of overconfidence leading to speculation and the expectation of the even greater returns which might not align with the real market condition is a serious concern. Today, every investor thinks that I can do better than the fund manager, because market is rewarded like that. But there is a very famous saying, past returns are no indicators of future returns. that overconfidence that is happening, I think it's a reason to be worried. And that's what exactly Economy Survey talked in its latest edition. So with this, I have done with my presentation. Let's open the floor for question answer. Oh, Nagmat sir is saying there are fears about US slipping into recession, which seen into US market an impact on our market preview, always on the same place. So I did mention Nagmat sir in my presentation. See, if you had asked me recession, if you use word R last month, people would have surprised. Forget last month, 15 days back, when the US GDP data came very strongly, US second quarter. They are fear. I don't know. It's too early to talk about it. Whether it will be a recession or not, we need to wait and watch. Now you are talking about what the impact it would have. I give some data to you, am I right? How the US market perform, S&P US 500 perform, and how BSE S&P 500 perform in the month of July. I think India seems to be more resilient to what happens with of course there will be a collateral damage. I'm not saying no. But there is a fair chances that the Indian market should outperform the US market. So it's a developing story. It's a developing events. We need to wait and watch. We can't say conclusively that US will slip into recession. We need to wait and watch. Sorry, I'm having a throat infection, and that's why I'm not able to speak little louder. In fact, yesterday I visited a doctor, and I've been given some medical course. I'm taking it. From yesterday it's better, but still I'm not able to recover fully. Milin, I have subscribed from today how to process for investment further. Sir, I'll ask my customer care department to reach out to you and help you to navigate how to use our website. Amir, please forward this question to our customer care department. So someone will reach out to you, most probably on Monday, because today the team would have left, but maybe tomorrow, maybe on Monday, they will come and explain you. Jeet is saying, I appreciate your nice efforts in your excellent presentation always. Can you add one slide every month stating how the stock market has been historically in that month? For example, August, additional slide can be for the US markets too. So yes, we do. Okay, fair enough. Jeet, your suggestion accepted. We will do that. This one, so just forward me this suggestion, Amir. I'll ask my team to put this. Fair enough. It's very easy to do that. We'll do that. Thanks a lot for your inputs. Iron stock market getting into bubble zone. Syam Sundar, what are the indicators of data pointers market bubble? Syam Sundarji, I did mention, I've taken 2 quotes from the economy survey, which clearly says what it has to say. I don't know whether into bubble or not, but we are definitely in an expensive zone. Bubble is a little harsher word to use. And I think what has happened is that, our regulators also realize that things are getting little out of the comfort zone, and they also started proactively working on it so that thing doesn't go beyond their control. So I don't think we're in a bubble zone, but definitely we're in an expensive zone. Kunal, do you feel the recessionary fears in US could be true? Which sectors will get impacted if in India if US indeed goes to recession? Again, very similar. I'm very happy that you people are very well versed with what's happening in the US market. No one had asked me this question last week, am I right? Previous week about the US recession. And suddenly the fear of US recession is coming in. And that's why I'm saying how sentiment changes in no time. Till last week, everyone was asking me why are we not investing in the defense stocks. So 15 days back, no one today asked me. Sentiment changes in no time, am I right? This is what real estate stocks. A lot of people ask her why did we not invest in PMS real estate stocks, and I did mention we are a little careful about that. And in 1 week, the things have changed very drastically. Coming back to your question about US recession, so it's too early to talk about whether it will be US recession or not. Still there are not enough data which makes me believe that there will be a recession in the US. I think we need more data points to come to meaningful conclusion that there could be a recession in the US. If there is a recession in the US, definitely IT could come under pressure. Why? Because the budgets could come under pressure. And which sector would benefit? Basically, purely those who are domestic focused. So that's what our sense is at this point of time. But Kunal, these are all hypothetical questions that we are answering to. We need more data points to come in, and as and when that happens, I think we can revisit your question. Subham says, sir, you always say, please consult a financial advisor. I want to know who is my financial advisor. Are you not my financial advisor? Subham sir, technically we are not a financial advisor. I must tell you that. Why? Because your financial advisor would first understand what is your risk profile. He will look at what are your assets, what are your liabilities, what are your financial goals, what are your financial planning you would like to do. And based on that, that financial advisor will give you a complete roadmap. Today, we don't know who our customers like. Sir, Subham sir, for example, I don't know who you are. Am I right? People, those who come in a webinar, we have no clue. They may be our customers, they may not be our customers also. Am I right? We don't know their age, what is the risk capacity, where are the assets, what are the liabilities. And due to that, we need to put this disclaimer. I hope you understand, sir, where I'm coming from. What do you mean by core sectors? So there are 8 core sectors in India: crude, energy, coal, cement, steel. These are all defined. These are been defined as the core sectors by the Ministry of Finance, and they have seen a 20-month decline, growth in decline, not the negative growth in decline to 4%. William Charles, what's your outlook for the Indian market in the coming week? Sir, I'm not so expert to predict for 1 week. What my sense is that, and of course I've been proved terribly wrong in last couple of months, where I've been saying that market should need a healthy correction, especially mid and small cap. It did not happen. Okay, so you should take my view with the tons of salt, not with the pinch of salt, because why? My predictions are going wrong actually. I don't know what would happen in the coming week, but I do expect that market should correct. Why? Because the regulators also want market to correct. They want to, when I say correct, they want, they are little concerns about what's happening, behavior of the retail investors. That's the reason they want to put more checks and balances, just to ensure that we don't have any unhealthy growth in the equity market. So my sense is that market need a healthy correction. That was the statement I was making 3 months back also. I'm making a statement now also. But once that correction happens, I think the next leg of rally will happen from the sectors which did not participate in this rally, which is happening right now. Prasad sir is saying, as the market is expensive, is it good idea to buy all 4 green dots? Says only and hold for long term. Will the downside for structural be limited if the heavy correction happens? So logically, yes. Prasad sir, your question is that logically, if I buy all 4 green dots, should they fall little less than compared to overall market? The answer is yes. But not necessarily everything that pattern will apply to each and every 4 green dots. There will be some companies that can happen, some companies may not happen. My advice would be, look at the sector that 4 green dots are happening. Most really large cap should show a lot of resilience as compared to mid and small cap, even though it's a 4, all are 4 dots, am I right? So let's, my sense is that large cap should have more resilience as compared to mid cap within that 4 green dots. That's how you should look at it. Yasil Kumar, I hope your thought is better condition. Take care and thanks for sharing the monthly update. Thanks a lot for your good wishes. Yes, it's better, but it's still not that good. Yesterday was really bad. I in fact post our webinar with our PMS customer. We had our investment committee meeting, which I had to do that. Then there was some discussion with RM. Then I went to the doctor. Fortunately, doctor, no one was there, so I could quickly meet that. She advised me some medicines. I've taken that medicine. 2 doses I've taken, feeling better, but still not the best. Most probably, by weekend I'll get some rest also. So I think I should feel better. Let's see. Jaya Krishna says, is it a good time to increase allocation to corporate debt, guild mutual funds? My answer may be no, actually. If the rate of interest has to come down, the bond that you are holding right now, I think that the value will come down. Am I right? Because no, if the rate of interest goes down, then this should go up because you are holding at the higher rate of interest. So maybe it may be a right time to do that. But I'm not a big fan of debt, right? Because I'm a big fan of equity. I don't have any money into corporate debt or gilt mutual funds. Why? Purely because over a longer period of time, I've realized that the equity does extremely well as compared to any other assets class. If that is the case, why should I basically too much bother about short-term, gain kind of stuff? But if you want to do that, maybe you can do that. That's not a bad choice as such. But I'm not a big fan of that. Badri Nayan, Guruji, earlier you probably mentioned that Nifty to 99, if my memory is correct. Is there any revision now? 99 I'll be less than 20%. Can it be classified as recession? So Badri Nayan sir, that 19,000, yes, you are right. I had did mention that there is a probability that Nifty can touch 19,000. But not necessarily that market is obliged to follow my prediction. Am I right? So have I revised my numbers? Till now, answer is no. I have not done that. But I do expect market to see healthy corrections. Now, technically, what we are saying is that recession 20%. So it may not go to 19,000, maybe to technically correct as a correct what we call recession. Or it says correction, or not. It says a bear market 20%. It doesn't say recession. Recession is for the economy, not for the equity market. Am I right? So my sense is that yes, we need a healthy correction. Whether the healthy corrections comes and stops at 19,000, it stops at 19,500. Does it stop at 20,000? Does it stop at 21,000? I have no idea, to be very honest with you. What I am saying is that we need healthy corrections. And these numbers, we will revisit at some point of time. Right now, I don't think I need to revisit for the very simple reason. A lot of data inputs are still coming in, and they are coming in and giving a very mixed picture. I'll be very honest with you. On one hand, your core sector goes to 20-month low. At the same time, if you happen to listen to the commentary coming in from the consumer side, like QSR and other people, they do see that people are not still come back in terms of the buying. When you look at the auto numbers, does not inspire so much confidence. If you look at the cement numbers, does not look inspire so much confidence. If you look at the steel numbers, does not look so much. But on the other end, the GST correction looks extremely good. Whether you look at the consumption of diesel and petrol, that seems to be looking extremely good. So, the mixed numbers are coming, and due to that, I said, let's me not revisit this numbers one. Maybe I'll revisit. I'll come in front of you if I revisit that numbers. Right now, 19,000 remains 19,000. I don't think I need to revisit that number and revise my numbers for Nifty 50. Rajendra Das, month of August is the most of the time given positive. Is it also in 2024? Will it be on? That's what your question. The month to date, the numbers are not so great. Am I right? Last 2 days of August, the first 2 days of August are not so great. Probability is very high. It may not give a positive return. Probability is very, very high. Please note that these are all probability I'm saying. Don't hold me accountable if market goes up in the month of August. I'm just using the word probability. And market has its own wisdom, has its own logic, and it has proved many pundits wrong. There is no reason I cannot go wrong. Ganesh Hegde is saying journey of 25 to 20 to 25,000, 25 was faster than earlier 5,000 because the percentile was less than the earlier. 25 was less, 25, well, 20. You're right. You're absolutely right. And despite that, I do believe that 25 to 30,000 journey will not be as quick as what we saw from 2025. Despite the percentage gain is little less, you're absolutely right. But see, remember, we believe everything in life is linear, but equity is all about non-linear. And I know you put a caveat. This is just a question. This is not a question, but just a comment. Fair enough. That's a good observation that you made. But despite that, I don't believe the 25 to 30,000 is even less than 25%. Am I right? And yet, I believe the number of days it will take would be higher than the journey from 20 to 25,000. I want to know more on the fertilizer stock. Is it declining because of the monsoon season, or is there any other impact on it? So my sense is that there is also a little overcapacity of the fertilizer globally. If my memory serves, I need to again revisit that because I keep reading so much stuff that sometimes I also fail in my memory. So what my memory recalls me that there is an excess capacity in the fertilizer globally. Number one, monsoon let us be little uneven. That could be another reason why this could be. So I must tell you that we do own one agrochemical company in our PMS, and that has done extremely well for our investors. So I think we need to look at more data on that to really come to this. So maybe if you can ask me this question again next time, I think I'll be more prepared to give you more data with a reply with a lot of backed by the data. So we need to wait and watch. So give me 1 week time and I'll come back to you, Kuldeep sir. Harshat Kale sir, for leaders of fundamentals, for learners of fundamentals, can you please arrange a webinar on ratios and their significance in selecting stocks? I can definitely ask my team to basically do that webinar on fundamentals. Definitely, I'll ask. I'm not the best person to do that, but we do have a very bright brains in our office who are master in that. I'll ask. Just ये मुझे भेजवा देना. I'll ask my team to work on that. San is saying, good evening. What is your view on energy sector? Is it safe to transfer of holding to energy sector stocks? Fund houses are also raising money through the NFO. Please give your stock opinion. I wouldn't be very comfortable at this point of time, my sir. So answer is clearly no. Wait and watch. It may not be a good time to increase allocation to energy. Anil ji saying, what will the future of defense and railway? I have said time and again, and let me reiterate for benefit of everyone and many people, investors were not so very happy with us that we have not taken exposure. In fact, one of the defense company we exited post budget. So sorry, post election. I stand corrected. Because we were a little cautious. We don't claim that we'll always be able to sell at the top of the price, and we never claim that we'll be able to buy at the bottom of the price. The reason we exited because we believe that some of the defense companies are running ahead of the fundamentals. You would have seen what happened to counter HAL in last 1 month. You would have seen what happened to the counter of Bharat Electronics, Paras Defense, Astra Microwave, and so on and so forth. We believe defense stocks are running a little ahead of the fundamentals. So the business will do well. I'm not debating about the business. My worry is on the valuations front. And if the valuations are reached, there is a less probability that they'll be able to. The risk reward is definitely not in the favor of reward. And railway also, our sense is that there seems to be some amount of slowdown. The number of one of the railway company came out a day before yesterday, or maybe a couple of days back. It's not so great. I've gone through some of the call of some of the companies, and they're also not projecting very healthy numbers. So my sense is that both railway and defense from here on should underperform. And hence, does it make a sense to increase the allocation? The answer is no. Santosh is saying all PMS subscribers have same stock holding or different, sir, different holding. Our we don't have a model portfolio concept in our PMS. So if you come today, we will select with the best stocks available as of today. Someone come after 1 week, we will select the best stocks available as of that day. And due to that, the portfolio construct could be different. There will be a few common stocks, but not necessarily that we'll have the same stocks available. So we don't have a same stocks. It's a different holding and different customers. Kirti Kumar Singh, is core sector growth is low. How GST collection is so high? Now, you are right that your question is very pertinent. And in fact, so core sector, as I was talking about, is the steel, cement, energy, coal, mining, and so on and so forth. The GST also includes the manufacturing, or the service. And I think the collection, which is better, maybe because of the service sector seems to be doing well, and that is basically collection high. My personal opinion, I do believe now that the growth in the GST collection may be a little lower going forward. So what we have seen about 10 to 11% collect growth Y on Y, that may not get sustained. I think logically or the mathematically, it should come down to 7 to 8%. That's what my sense is. Nehal Shah is saying, please guide how I trim my portfolio where the profit is good or where a loss is there. Do you do to in this inexpensive market where I exit from the due to in this expensive market where I exit from the portfolio? If I understood your question, sir, look at the score of the company which is available on our website, and then decide which company you should retain and which company you should lock in the profits. That's a simple way I would suggest you. If you're getting too much confused, you basically sell your holding and come to the model portfolio, which is available on the site, and choose your risk appetite and do that. Now the model portfolio, the beauty with the model portfolio is that it will tell you when to exit, which company to exit, how much to exit. If you're a PMS, if your investment is more than 50 lakhs, you can come to the PMS and we will tell you what needs to be done. So maybe you can transfer your existing holding to the PMS, and then we will, based on the merit, we'll see which stock we need to retain, which stocks we need to trim down, and which stocks we need to exit. So this is I give you all the three options, sir. You can pick and choose what suits you the best. Vikram Singh is saying, would it be advisable to get out of the stocks bought recently when margin of safety, current market price, when margin price is low? See, it's all depending upon what is your, when you, if you know what is the margin of safety and you are very sure of that margin of safety, answer is yes. But many times we don't know what is the margin of safety. So that's why, we have to be a little careful of that. But if you are very sure that margin of safety is low, definitely makes a lot of sense to get out of those stocks. Then it's no brainer. Dheeraj is saying, do you select stocks under PMS as per customers' financial goal, profile, etc., or is it between Mojo, Power, and Soul? No, sir, we don't. Sir, because we can't do that, sir, because then we will have a very different kind of. So we don't take into consideration financial goal or profile of the individual customer. What we do is that based on our IP, we select the stock and it goes. The only request we make, Dheeraj sir, is that when you come to the PMS, come with the 3 years minimum time horizon. And if you come with the minimum 3 years time horizon, probability is very high, the strategy plays out very beautifully. If you come with 3 months, in fact, we have rejected customers also who wanted to come for 1 year and 2 years and so forth. In fact, we also reject customers in our PMS whose profile doesn't match to be a PMS customer. Like I'll tell you one classical case. One customer wanted to join our PMS, and he said, I can't take the drawdown. And I said, sir, then you are not meant for the PMS. Why? Because equity market में invest करेंगे, प्राइस तो नीचे जाएगा, कोई गारंटी नहीं है, मेरी क्या कोई दूसरे फंड में से कोई गारंटी नहीं है कि जो आपका पोर्टफोलियो नीचे नहीं जा सकता है. So we basically do that kind of a due diligence to ensure that, we don't select the wrong profile of the customer, because a guy who cannot stomach the volatility should never come to the equity market, and in turn our PMS portfolio, because our PMS portfolio is more volatile as compared to the overall market. Why? Because we normally tend to invest in mid and small cap higher as compared to large cap. Right now we have taken more exposure to the large cap, but eventually we'll go to the mid and small cap. And that's why we look at the profile of the customer to see that. I must tell you, we would have rejected many PMS investors in our PMS portfolio because we did not match our profile only. What their expectations and what the reality, there was a sea change. The customer don't feel very happy with that. But they, why are you rejecting us? And we rejecting them purely because they don't have that mindset to be a PMS customer. So we do that. But the portfolio construct is the same, whether you come with 50 lakhs or you come with 25 crore. For us, it's a two strategy, Mojo Power and Mojo Soul. And based on that, we invest, based on our stocks available, we invest. That we don't then look into what is the financial goal and so on and so forth. See, our aim is what? Our aim is to create alpha on the portfolio. And that's the theme line that we want, basically follow that. So that's our goal, that's what our theme. And that exactly we said, as an investor, you should also have the same aim, that how can I create alpha on the portfolio? How do I make my money work for me by giving money to the professional advisor, professional fund manager? Jayant sir is saying, the insights you give are valuable. Thanks. Once you had mentioned that our PSU defense sector could be in a melt-up zone. However, in the budget allocation, the defense sector is higher. Will this drive up earnings to justify the PS? What is your current view? No, Jayant sir, my sense is very clearly, the business side, I don't have any concern. Again, I repeat, the defense company business should be extremely good. Then growth in earnings will be there. But growth in earnings is not that high that they justify the current valuations. They are running little ahead of the fundamentals. So we are a little cautious. We don't have any, we did have one defense company in our good allocation. We locked in the profit post-election. So we are little concerned about the valuation, and that's why my sense is that risk reward, like someone has asked me for the margin of safety, use the word margin of safety. Margin of safety is not very high with the defense companies. Now Amit informs me that time is up. Amit, सवाल खत्म हो गया कि time हो गया? अच्छा, सवाल भी खत्म हो गया, time भी हो गया. I'm very happy that I could take up each and every question that you people have posed. Good night, take care, have a great weekend. We do expect market to remain a little choppy in the coming weeks, but that's the nature of the market. Start learning to live with the volatility. With this, good night, take care.